welcome to today's fast video, which is called Chasing S&P 500. Is it basing or trending? Which way to go next in stocks and why exactly? Such is the daily chart. Ominously looking daily candle, a rejection to go higher, but is that a true reversal even if volume did spike? Those 3% of stocks trading above various periods of their moving averages is still looking quite tame. So this is the daily perspective, where the 20 period is not getting overly extended to the upside. However, I had been clear to clients yesterday that it is not a good time to be chasing the Trump gap, and it's frankly not disappointing that after, say, 4% moves, we get some kind of a retracement selling following the opening bell and generally some kind of an attempt to fill the gap. Is it successful? Is it meaningful enough to be considered filled? Right now, I would say not yet, but we are seeing some kind of a stabilization, which is exactly what I have been talking about since it in hindsight became apparent that the Bessent behind closed doors appearance had been bought into by institutions, and even if there is no China deal, not even negotiations, and it's frankly at the stage of both countries waiting who will blink first, because both deny ongoing negotiations. Bessent had been yesterday saying about it's taking 2 to 3 years to complete any kind of a China deal, while denying unilateral lowering of US tariffs against China. China insisting on respect and being treated with dignity. Bessent going after, say, international institutions that still treat China as a developing economy. So it had been really an interesting 10 a.m. New York Times speech that Bessent had been having, and of course this had made for interesting intraday moves. However, they had not reached quite enough to the downside for me to be interesting. So the question is, has the perspective changed right now, and are we anyhow transitioning out of the environment of failed breakouts and failed breakdowns into some kind of a trend? This is what had been quite apparent already from the market breadth chart. You can see it as well on the one comparing individual sectors and international stocks. Look at how DAX is doing today, how Central European stocks and Eastern European stocks are doing today, and you have pretty much the answer as well, and that applies as well to the US dollar seeking to stabilize, which we will see on the following charts. However, this has been the key one when it comes to yields. Yields retreat had been soundly rejected, and that is even more applicable on the short end of the curve. So even though Trump and Bessent had succeeded in dialing back the say ratcheted, uneasy, jittery atmosphere, this is nowhere near the calm that would be needed, and the US dollar reflects that just as much as still purely not returning confidence into buying of US treasuries, which had been the key subject of my yesterday's video, to which I'm linking, that I had made well ahead Bessent speech, and that's been the key is to see US dollar stabilizing. Is it there? Is it not yet there? There will be more time spent around the crucial 100 level. Thus far I cannot say that the US dollar is ready to rip higher above 101. That would require quite some consolidation and palpable progress in country deals and solving the China conundrum, because for all the Bessent statements about it taking 2 to 3 years, Wall Street Journal saying that 50 to 65% tariff rate against China is on the table to be unilaterally lowered, only for this news to be denied. Well, so have your pick which way the wind is blowing, really. And that is as well what gold is reflecting, following the reversal that I had called for clients, and they had been spared the last 2 meaningful down days. Gold is stabilizing here, and depending on where next the tariff drama goes, we would see where gold would indicate that fever as rising or slowly retreating. Thus far it's in a wait-and-see mode, even more so than the beleaguered US dollar. Silver, very encouragingly, did spike yesterday, and what I had been telling you in the extensive Saturday video had come to fruition, and we are seeing a very orderly, nice retreat in gold to silver ratio and all the other ratios that I've been covering for you. This part, by the way, is an excursus into what trading signals clients are getting, a little peek under the hood. Just for you enough to connect the dots of what had been the calls made for clients in the not so distant past. So we are seeing silver picking up steam, following the nice long pace after being hammered on the tariff uncertainty. It's rising, and one thing to back it, following my yesterday's call for oil to take a beating, oil is as well stabilizing. So this, coupled with the extremely negative sentiment and positioning that is to be seen in oil right now, we are seeing some kind of a sideways period, and maybe, just maybe, those buyers are not yet totally done on the outside, especially if the tariff wars get out of hand and both US and China dig in their heels. And frankly, China, based on how I read the situation, has every incentive to dig in their heels. Remember that face saving is very important in Asian cultures, so they would not just fold like a cheap suit and do a series of tweets what had been witnessed across the ocean from their point of view. So much for oil prospects and those sellers not clearly ready to reassume the next beating right now, given all the uncertainty and the headline risk that is still there. But I have presented what are the winning plays within this context. Let's drop a few words about Bitcoin, which is tactically pulling back. You remember as well what I had been saying about it running to 95,000, and it's very nicely basing there, and today's pullback is doing the same what I had been talking with clients at the beginning of the week, meaning strategy having another opportune entry point on the long side, together with the tactical pullback in Bitcoin. So point worth considering for you market timers. Join page will help you select the right value based on what and how you trade. You know pretty much everything else, so let's talk again soon.